Hi everyone, Joe Gentili from Left Tail Risk Advisors. Okay, this video is for special needs parents. And the video has to do with what's the biggest mistake that people typically make with regards to life insurance and special needs planning. And if you've watched any of my videos, you know I've done a lot of videos on product types with life insurance and the pros and cons of different types of coverage. And I do have strong opinions on that. But I think the biggest mistake that parents can make with life insurance and special needs children would be that they have the child directly as a beneficiary of the policy. So, of course, the whole point of getting life insurance in this context is to make sure that when you're gone, your child has resources to live on, right? But you don't want to leave those resources to the child directly because that causes two problems. Problem number one is that there are government programs that are in place to help your child, most important of which is Medicaid. And by leaving assets directly to your child, whether it's a life insurance policy or other types of assets, that can disqualify your child from the benefits of those programs because many government programs are means tested. They are available to people that have assets and income below a certain level. And um, if your gift or the inheritance or the life insurance policy takes them above those levels, then it could disqualify them. So that's number one. Number two, you want to have a special needs trust, and you're going to want to have a special needs trust because of what I just described, where if the special needs trust holds the assets or is the beneficiary and holds the death benefit, then it's not going to disqualify your child from um, the government programs like Medicaid that are means tested. But also, you're going to want to make sure that there's not just money that's left there with no direction. So the special needs trust is, in addition to holding the assets to preserve access to government benefits, it's also where you're going to want to set up, um, let's say, the operating instructions that you want, who the guardians are going to be of the child, who's going to be the trustee of the trust, what's your letter of intent as to how you want the money spent, how you want it invested, what's the type of decision making that you want made around these things. And you could do that within the trust, but if you just leave the assets just in the child's name, then the money's there, but your directives are not going to be clear, and kind of the decision-making authority with regards to trustees and guardians is not going to be in place. So, in order to make sure that your money is going to get the maximum amount of good for your child, that it's going to be there to provide resources when they need it, and it's not going to disqualify them from means tested government programs, and you're going to have the right team in place, authorized team in place to care for your child and to care for the funds. You're going to want to make sure that your child is not the beneficiary and that you have a special needs trust, and that trust is going to be the beneficiary and it's going to contain all those instructions that I had just mentioned. So the biggest mistake that I see people make is not picking the wrong type of life insurance policy. It's not having the beneficiary set up in the correct way to make sure that those funds do what they're supposed to do. If you have any questions on this topic, as always, please feel free to reach out. And if you like this video, please subscribe for future ones. Thanks. Bye.